Trying to get everybody back in here, man. We had like 20 heads in here. God, I do not know what just happened. I'm new to this, guys, so just bear with me. I'm trying to get it all figured out. Hey guys, what's going on, man? Many of you have seen me, many are familiar with me. If you're not familiar with me, I'm Mr. Top Hat, and I'm in many discords, and try to be as much help to everybody in the options, crypto world, stock market, and I'm gonna be answering questions basically today. This is my first time doing it, and I'm just going to be answering some of your questions. I know I get a lot of them during the day, every single day, and many I try to get back to, and many I really, 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 really fail at answering your questions. So um, I'm gonna start reading some of your messages, and I'll try to get to all of them. If I don't, trust me. I mean, we're gonna do this every week. I'm gonna try to get back to you guys, as much as possible. And I appreciate you guys, for being here. And I want to be able to be as helpful as I can, um, and try to go over whatever we can, as much as possible. Hey, this is your mod. Will FOMC be positive? Okay, so these are the kind of questions that we don't know. Um, Obviously, with rate cuts, it's very different for what how the market reacts. Sometimes a rate cut, obviously means positive, and it should fly. And sometimes they take that as the Fed getting scared that they're not reaching to where they need to be, so they're just slowly trying to slow the inflation up, and then it could actually scare people away from the stock market. So there's different ways to look at the FOMC. Therefore, we always want to wait till what the initial rate cuts are. And once we know what the rate cuts are, we see where the stock market is moving, if it's moving up or if it's moving down, then at that moment we'll be, considering which way it's going to go with Powell as he speaks 30 minutes later. And I try to speak about that almost every single time FOMC comes around. If you guys know me, I always talk about it, how we can scalp the FOMC infinitely, to the amounts that we can make so much money off of it, with a simple movement. Um, so, to answer your question, I don't know if the FOMC is going to be positive. I'm pretty sure they're saying that it's going to move um, about 25 to 50, but I'm not 100% sure. These are all speculations right now. So we'll wait on that until we see what the actual rate cuts are going to be. What's up, guys? What's up, Clyde? I'm here. You got this. You're watching the FC or Canelo. Bro, you're a great trader. Thank you, brother. You're a huge help. You're the only one. You're awesome, bro. We appreciate it. Trade the trend. About the golden indicator, do you use it alone or do you also use the confirmations? I noticed that the setup has a number of other indicators. Also about what we're using it on a 5 minute or 4 hour. So to answer your question, what is that, McLee. So if you look at my chart, right now we're on the 15-minute SPY. As you can see, this previous 2 days. So this is Friday, this is Thursday, and this is Wednesday. So if you see here, we got the buy EMA. Now, how do we know this is a true definition of a buy EMA? So let's kind of like zoom into it. So as you can see, we got a buy EMA, which means the 8 and the 34 EMA crossed. So as this happened and we got into it, you can see as the SMI way down here has, kind of tried to reach the 200, the 200 MA, which is this red dotted line that I have here. So as soon as it got there, you can see that we also got the vortex, which is what I speak about as well. So the vortex crossed each other. So you can see the red line went under and the blue line went up. That just means this is a positive movement. And the volume is actually switching to the upside as well. So once we see that, then we look at what I like to tell you guys is the strat. So the strat is the 1, 2, 3 that I speak about as well. And you can see here that since we got the buy EMA, we have not had any negative candles. All the way up to here, we had a 2-1-2 red that turned into a 3 candle, and continued up. You got a 2-1-2, a 2-3-2, and all the way till the following day, which is where you can see this break, where we could have got around this candle and we could have said, okay, this could possibly start moving to the downside again. And that saying is because the SMI is way too high. The volume is high. The MACD is still at its high point, but it hasn't crossed, as you can see, till it crossed over here. So it hasn't really crossed each other, but we would have technically gotten this play at 545.93 and got out at 554.90. That's 100% play with the golden indicator. And then as you can see, it kind of moves sideways. And as it moves sideways, it got the buy MA, which is another positive indicator that's saying, hey, now the 200 and the 50 MA has crossed each other, which you can see right here. So the green line and the red dotted line crossed each other, and now this is continuation to more upside. And as you can see, the SMI has just continued to stay above the levels that that should turn it to to the downside, and it just kept going up. And then you got the pink line, which is your VWAP, and you're continuing on this yellow line, which is the 34. If you're continuing on this 34 and you're bouncing off of the 8 EMA continuously, then this is just a continuation of bullishness. Now, as you can see, till we got to Friday, yesterday, they're kind of curving towards each other, and the SMI went down, but this does not mean that this can continue down. This can actually mean another push back up, and the SMA can push back up, and these can move away from each other once again. So when you have the 8 and the 34 moving away from each other, further and further apart, as you can see from these levels, then that means it's just a continuation back up. But as soon as the 8 and the 34 cross back to each other, now we have a signal to go back down, if that makes sense. So so yes, to the answer to your question is I do use other indicators, obviously, for the fact that to assure myself that is this a real EMA or is this not a real EMA. So I usually use the 5-minute and the 15-minute. So if you go to the 5-minute, you're going to see that there's a sell EMA here for a little move, a buy EMA, and then another buy and sell EMA here. So the 5-minute is more of a scalp trade. So if you can see here that there was a sell EMA and it dropped, and there was not one candle stating that this is going to reverse back up. Now you just entered a scalp play, and you got 547 all the way down to 540. That's a $7 drop that never reversed. Now, as soon as we got to a low and we got the SMI and the RSI all the way in the bottom, red hot, that means this is way oversold. And if it's way oversold, then we have to wait till that candle that shows us that, hey, this can reverse back up. And as you can see here, we got 1, 2, 3, 4 candles. So as soon as we got to this fourth candle that was above the 8 EMA, as soon as you go above the 8 EMA, a full candle, that's when you can assure yourself that, okay, this is, a really good play to get into now, and it should move back the other way as soon as you cross back over the 8 EMA. So this, all the EMAs come with the golden indicators. So you get all of these indicators already. So you don't, if you don't want to use any of these, then you can just go off based off, where the candles are above the 8 EMA or below the 8 EMA. And you can see here, it just kept going above the 8 EMA. And then we finally crossed the 34 EMA. And that's when it was a continuation back up. So that's my answer to you. So the 15, anything 15 and above is for longer plays, and anything that's that 5 minutes or less is going to be a quick scalp. As soon as you get the EMA crossing, you can get into that for a quick scalp. And quick scalps, I hope you guys understand the difference between quick scalps and long-term plays. Quick scalps, you want to be able to buy more contracts. So if you buy more contracts, you're going to make more money. So even if it's a 10% to 15% to 20% move, you're going to be extremely happy because you're buying 20, 30 contracts at a time, and you're scalping the S&P 500 for a quick 10, 15%. That's a nice, $500 to $1,000 in profits, rather than a swing play or something that's, a little bit more risky, or like a earnings play. Those are going to be less contracts. So you're going to be able to feed it. You know what I mean? So you're going to be able to sit there and say, okay, if I'm going to enter this play that's going to expire a week or two from now, then, I don't need to be buying too many contracts, because I want to be able to feed this play. I want to be able to be like, okay, it dropped about, $40, in 2 days. It still looks good. My chart still looks good. It still looks like it wants to move, the direction I want it to. So then you're going to be able to feed it, a couple more contracts. And this is the difference between swinging a play and scalping a play. A quick scalp is going to be quick in and out, and you want to be able to get as many contracts as you want with with the stop loss, of course, of your choice. So if you're going to buy 20 contracts, you got to be like, okay, with these 20 contracts, I want to lose the most $100. So you're going to be able to set your stop loss to where these 20 contracts are only going to make you lose $100 if it goes the other way. And hopefully that kind of explains the golden indicator and what a quick scalp is compared to the 5-minute time frame and the 15-minute to the 1 hour to the 4-hour time frame. All of these time frames are going to be completely different. As you can see, when we move it to the 4 hours, now we got a sell EMA that went from 555 all the way down to 540, and then you have a buy EMA, which was 2 days ago at 554, that went to 562. So these are more assured plays. As you can see here, another buy EMA pushed it up, and so on and so forth. So yes, the time frames are very important. It's very important to know which time frame you are looking at, because if you're looking at the 5-minute time frame to make a play that's going to be 2 to 3 weeks out, then you're doing it wrong. So just make sure that you're using the right time frame. Powell is the final boss. Everyone can. We get a lot of likes by getting a free lesson today. Press like. Thank you. Can explain your FOMC strategy a little bit more. So the FOMC strategy is pretty simple. Okay. I'm gonna go ahead and look at this pie chart. Let's just say that the rate the rates came out at 11 a.m. Pacific time, right? It came out. There was, there was a rate hike. So the news ate it alive, right? Let's say we jumped all the way back down. So let's say around, you know, 30 minutes later, right before Powell speaks, we want to obviously go back, back up, because this big drop has to move way back up as soon as Powell speaks. Whenever Powell speaks, it always goes the opposite way. I mean, and I'm gonna tell you, this is 99% of the time. So 99% of the time, it does move up the other way. So right before Powell speaks, we're gonna enter some, quick calls, and we're gonna make them like, in the money or a couple of dollars out. They're gonna be a little bit more expensive, but that way you can secure yourself a little bit more than rather than going too high up or like too far out. That way, if Powell speaks and it pushes it back up, and then he says something extremely negative and it pushes it back down, you're not like completely at a big loss. You want to be able to scalp it like one or two, three candles up from the initial interest rates, to the to where Powell speaks. So most of the time, when Powell speaks, it's usually, when the interest rates come out, that's when the market either moves down or moves up. So if it moves down before Powell speaks, you're going to take calls. And if it goes up before Powell speaks, you're going to take puts, and vice versa. And it's very simple. It's not something that's really that hard to do. It's just you got to be prepared to get in and out very quickly, because these things move way too rapid. And a lot of people say, oh, like I got out too early, and then it pushes up, another like 30-40%. They're like, oh my god, I can't believe I got out. But then all of a sudden that thing drops so hard that you would not even be able to get out of that place. So you don't want to be greedy, and you don't want to go sit there and just hold it all throughout the FOMC speech. You just want to be able to scrape it and get out. Don't worry about it if it keeps going up and it goes crazy up and whatever it is. That's all like in your brain, and that's still a W. You got to always take that as a win, because you just took a win off of this play back up. And if it went back down right after you got out your profit and went up 20% and went back down, you would have been crying and saying, oh my god, I should have got out. So don't ever say I should have kept it, or I shouldn't have got out, or I got out too early. Leave that for the birds, okay? Because the only way to be consistent and to continue to be able to continue to be consistent on a daily basis, have a plan, like I always say, and always be able to um, just stop looking at the market as soon as you hit your price targets of the day. So right when you say $400 a day, as soon as you hit it, just get out. That's it. You're done. You don't need to keep looking at it. Okay, will you share how to read the strat? So I have a video on that, so I don't really want to go over it in too much detail. So if you guys look at the YouTube channel, you'll see that I go over the strat, in full. So kind of, go and look at that video for me. I went into it into high detail on a video for the strat. The strat is if anybody's wondering what that is, the strat is these numbers here. So the two, and the ones and the threes. So there's three. So there's 1, 2, and 3 numbers, and it's either a 3T bullish or a 3-2 high. Bearish, or it's going to be a 3-1-2 bearish or a 3-1-2 bullish. So there's a lot of different ways to look at the strat, and it helps a lot with continuation of. So like I said, if you're gonna be here, this is a 3-1-2 candle. So you can see here 1, 2. So that means this candle opened up right around this area, dropped down, and then it went over the previous candle. So as soon as it went over the previous candle, this became a 2 candle rather than a 311. So when this opened up, it was a 311, which is like a yellow candle. That means it did not go over or below the previous candle. So if this candle went below this candle, it would have been a 3-2 down, but it became a 3-2 up because it went above the previous candle. The next candle was another 2 up, and then the next candle was a 1, and then the following candle was a 2 down, and another 2 down. So as you can see, it's down again. And then we had a 2-1-3 down, and then a 2-1-3 up, and then so on, so on. So this is the what you look at. Mostly you look at this in the 4 hour, because this kind of assures you what the stock market is doing. So as you can see here, there's 1, 2, 3, 4, 5 4-hour candles that have just been positive in the past 2 days. So you don't want to go against it now, right? You don't want to go into puts because you got this little cup and handle going on. The EMA crossed again, as you can see here, the buy EMA. So you don't want to go against it. So you here, not right now. You want to wait till you get something like this, like a 2-1-3 candle, where you can kind of say it's going to go back down. Or if you can see here, this is a 2 and a 2 red candle. You got another 2 candle, a 2-1-2, another 3-1-2, and it just dropped. 3-1-3 and it dropped. So that's what the strat really is about. It's a little bit confusing if you're like you haven't really like looked into it, but if you go watch the video, you'll kind of understand it more. And I'll try to go over it almost every week whenever we do these every Saturday. We'll try to go over it, and I'll see if everybody's gotten a little bit better about it or not. So go watch that video. I'll leave the link in as well if you guys want, but I mean, you can just go to my channel. You'll see it says how to use the strat. So go over that. Thank you so much for answering my question. I really appreciate it, and I appreciate you. No problem, brother. That's what I'm here for, man. Is there a way to buy a trade from your watch list at the price it was when you added it before market open and it shoots up? No, sure, I understand what that means. Is there a way to buy a trade from your watch list at the price it was when you? No, there. Oh, if you're saying like, if you can, use the watch list before the market opens, like as an options, and you can't. But stocks, yes, you can buy a share in the extended hours. If that's what you're asking, you can always buy stocks after 1 a.m. Pacific time if you use extended hours, which Webull allows it, and I believe TradingView allows. I mean, not TradingView. Um, God, it's going off my mind. A couple of them do right now. Allow you to, but I use Webull myself, and I can use extended trades, so I can get into a stock as soon as 1 a.m. hits, Pacific time. So that would be 4 a.m. Eastern time. So if you're in the East Coast, you can buy stocks at 4 a.m. Right when the market opens. If you know that this stock is going to move and it's on my watch list, and you want to get it before the stock market opens, because usually when a stock is moving, it usually just takes a big hit in the morning because all of these people are eating it up. All these big players are eating it up. So, and then as soon as the stock market opens, they drop it, let it drop, and all of these people that are like newbies are going to start buying it, and they're going to keep shorting it and just basically eating you alive. So you have to make sure that there's an EMA crossing, and you got to make sure that there's enough volume in there before you go and purchase something at the market open. Curious what happened on Friday morning. So that's a good question. So if we go look at Oracle, so one thing that happened to Oracle, if you look at the 4 hour, it was a 2 up. What happened to Oracle is, one thing was news. So after I took my stop loss, I went and kind of like started searching into seeing like, why the hell is it dropping? So there was news that they dropped the what was it, the price target. as you will. A couple of banks said that they dropped it back down to 170, 175. So as you can see here, around 170, 175, people started short selling it. And then you had another news article come out with people saying, "Oh, like we're gonna think that this stock should be around 160." So here it is, shooting at 160. But as you can see that we had a gap up and another gap right here, and this was supposed to create another gap up, but it didn't. And if you look at the 5 minute, um, if you look at the 5 minute, when we got in, this is when the news came out, and just ate it alive. And then we ended up getting a sell EMA, a buy EMA, and another sell EMA. But the good thing about it, a good thing about Oracle is it bounced off the 200 MA. So as soon as it bounced out of the 200 MA, this is, we could have gotten this at the end of the day and tried to do like another, lotto calls back up to like at least 165 where the VWAP is. But obviously, I don't trade on Fridays, so I just said, you know what, I'm gonna take my loss and just don't worry about it. Like you take the loss on your day off. You're just like, what, screw it. I tried to do something, and I'm not gonna look back at it. But yeah, it was a clear play to shoot. The volume was there. Everything was great. We had that little spike that happened. It just, everything just kind of, you know, just went to shit after that news. So yeah, it was a good play, but it was just bad news that came out at the wrong time. So, which is why I always say, just try to keep, at least Bloomberg on in the background. I didn't at that time because obviously I told you guys I was driving. Um, so I wasn't really listening to anything. I was just listening to music, and I saw a good chart, took it, said, it should be good. Look back at it, I took the stop loss. But yeah, I mean, if you can go back and look at my watch list, you'll see that most of the watch lists have been amazing. I mean, almost every single watch list, the number one stock just continues moving up, and we hit it almost, I want to say 90% of the time the watch list has been hitting. But it's usually the Fridays. That's kind of why I don't trade Fridays. It's also work related too, but at the same time, I don't trade Fridays just for that reason. It's just people try to save the market or kill the market on Friday, and it has nothing to do with charting. It has nothing to do with anything. That's why the number one 2 days for me is Mondays and Tuesdays. If I can just trade 2 days of the week, it will be Monday, Tuesday, or 2, 3 days. It will be Monday, Tuesday, Wednesday. I would not touch Thursday, and I would not touch Friday. But everybody's different. Some people hate Mondays, some people hate Wednesdays, some people, everybody has their own trading methods. But it's just me. I don't like Fridays, and that's my main reason as to why. Is because they always try to save it. So if it's had too many bad days, they try to say, oh, like the Bulls tried to save the week, or if it was falling, or if it was flying too much, and then they say, oh, the Bears tried to kill it. It's just the whole mind game that I don't like to play with anymore. So I just stopped doing it. All right, let me scroll up. I think I skipped a couple. Just to confirm, buy EMA is when 34 EMA goes above the 80 EMA. Yes, and vice versa. What are you looking at when you choose your contracts to ensure it's a good selection for the movement? So to buy contracts, it's usually the open interest and the volume. So you want to look at these two things. So you don't want too much volume and not that much open interest. At the same time, you don't want too much open interest and not enough volume, um, because that would be too many people interested with not that many people holding these contracts. So that would be more shorting. So whenever you're looking at contracts, and let's say you like a play, right? You enjoy a play, and you just want to say, okay, I like Tesla right now. Tesla looks really good. Let me look at a couple of options, right? So when you go open these options, and you look through the days, 7 days out, 15 days out, or the end of the week, when you look at these calls and puts, you want to open both sides. So you always want to be able to look at both. You don't want to just be opening, just the call side just because you're so bullish. You do want to see both sides. So let me see if I can get unusual. So you do want to look at both sides, and the reason why you want to look at both sides is just because the bid and the ask on mostly anything that, let's say we want to look at Tesla, right? So if you look at Tesla and you're seeing that there's 62% volume and it's more bullish than bearish, and you can see like these are the bid asks for the 235, right? So it's saying 235 calls September 20, which is 5 days away, right? So if you're saying 5 days away, they're costing about 420, 425. So the volume is 26,772. The open interest is 13,288. So when you're looking at your Webull or Robinhood or wherever it is, you want to be looking at both sides, so the puts and the calls. So if you see like all these people buying, 530 puts, 10 days out, something's going on. I mean, if like 70,000 people are buying these puts and like the rest of the puts are all like 5,000, 3,800, whatever, and then you look to the call side and the highest, that you see is like volume of, let's say, 3,000. That means, hey, somebody knows something. These people that are buying these contracts are no chumps. You know, some whale out there is buying these up, and the reason why I like to look at unusual wells is because it's going to show you the buy and the bid and the open interest, and the volume. So always look at unusual wells, and just search the ticker Tesla or whatever it is, and just be able to look through it. Because if you do that, then you're going to know, okay, what are whales buying? What are whales thinking? Are they thinking higher up, or are they thinking it's going to drop? What is the initial movement for this ticker? And then once you figure that out, then you go back to your screener, and then you kind of change it to whatever you like. I like to go like to, let's say, for 1 hour, and you kind of see like, okay, where is Oracle right now? Okay, Oracle is all the way up here. There's some kind of curve going on with the 8 EMA. 200 MA is way too far out. The SMI is getting closer to the oversold already. So if this can climb back over the 8 EMA and remain over the 8 EMA and continue itself back up, then this looks good. And then you look at the unusual wells and you see that everybody's buying calls on Oracle. Then everything works out. Everything looks good. I think this is going to be bullish. All these wells are purchasing it, so it looks good. That means I'm gonna go ahead and follow these people that are saying, okay, about 30,000 volume and 10,000 open interest on this position. So these contracts look good. These can have a good play, and most of the time I don't hold all the way through. So never hold your contracts too long. I just feel like the closer you get to it, the more manipulated it becomes. So a lot of people always tell me like, "Hey, why don't you still have like 20 more days? I know it's up 50%, but what if this thing like continues? Why are you getting out of your contracts?" Well, I know it's gonna start getting manipulated, so they might start shorting it. They might start messing with these, the contracts, the volatilities. It just becomes all over the place, and then you have your theta and all of these things. The times, that changes the numbers around. So don't think that holding a stock just because you're in the money, and you don't hold the contract just because you're in the money and that's it. No, because even if you're in the money, these contracts can start getting eaten up. They can become lower, lower, lower the closer you get, to it. So if you have like 559 spy calls for next Friday, and Monday opens up bullish, and you're like, hey, like I'm in it, like I'm already in it. I'm already at $2. It's already $2 above 559. It's at 561. So I'm good. And then Tuesday opens up and it's back at 559. You're like, oh, okay, I'm still good. But your contracts don't look so good. You're like, wait, why are my contracts like at a loss now? Shouldn't I still be up? And then Thursday opens up bullish again, and you're back at 562. But your contracts are still at break even. And you're like, wait a minute. Like, this is in the money. Like, I'm $2 in the money. What's going on? And that's what theta is. That's what all these time decay is. time decay can eat your contracts up like nothing. You know what I mean? Like it's like nothing. So all of a sudden you're like, okay, screw it. I still got 2 more days. I'm gonna wait till Thursday and see what happens. And then Thursday opens up and it's back at 560, and your contract's at a loss. And you're like, wait a minute, like I'm still, I'm still in these. Like my contracts are 559. This should hit. Now, if Friday opens up and it's at 562, then you're gonna be way into the money. But if Friday opens up and it's at 559, you're gonna be at a loss. So time decay always kills the contract. So that's one thing that scares me from staying in a play, and I end up getting out. Now, don't get me wrong. I've done this with Tesla way back when, where I just kept my contracts that were like very long periods out. Um, leap years, and they hit big time. I mean, I've hit my first 700,000 with Tesla to 800,000. So like those things are amazing to look at. So you don't want to be too, like, narrowed out. Like you want to be focused, but at the same time you still want to kind of look and see what's out there and see what can scare you. So secure your profits is what I'm saying. Secure your profits. That's my number one thing. Secure your profits. All right, let's go up to these questions. We got a good another like 25 minutes here. Did you use alert? Did you use to alert? I don't answer those questions. Green line is blue line. Oh, so the green line is 50 EMA, and the blue line is the 8. So blue line is 8. So blue line is 8. The yellow line is 34. The green is 50. The red is 200. What are you looking at when you're choosing your contracts in sure? Okay, that's the one I just answered. I know that the Strat and the combos indicator by Infinity Trains freely launched on TV is the published by your team. Now, where do you get Strat indicator? Strat indicator is a free indicator. So if you just go into let me see here. How do you do this? Okay. So if you go to indicators and you just put Strat Assistant, so is this one right here by Ricky Z. Carroll. I hope you guys see that. So Strat Assistant by Ricky Z. Carroll. This is the one that has the most followers on. So that's the one that I use. So it's a free one. So it's not like, it's not something you have to purchase or anything like that. It's a free indicator. It's given to you guys. And like I said, the Strat is made by a very famous trader. And even the ebook that I send you guys, you'll see, who it's written by. And yeah, I mean, I just me and Advent, one of my really close analysts, we really got into it. He kind of started showing me it, and I fell in love with it, and it works. It works so good with my strategy. Like it just made everything so much better, like so much more clearer. And I feel like that from what I was even a couple of years ago has made my win percentage, my win ratio a lot more better, because just looking at the strat is just something else. It's just a fun thing to look at, and it helps so much. I mean, I can't explain you know how good it is. I really can't explain like how good it is, because I don't know. It's just something that's been there, and now that I use it with what I know and have learned to use for a long time, it's just made things so much better. So yeah, go and get it, man. I mean, add it to your trading view. It's a free indicator, with or without any paid indicators, once you learn it, just trust me. Trust me, you're just gonna love it. And if you don't have the strat, if you're new to it, if you don't know what we're talking about, so just DM me. um just send me a message, and I'll give you guys the book for free. It's a free book. Look it over. Go look at my video too, and I'll kind of explain it a little bit more. But yeah, go ahead and check it out. Can you go more in depth in your exit strategy when playing your indicator? So the in and out of an indicator, let me make sure I'm in the right screener. Okay. So the in and out of an indicator. So let me go to something a little bit more volatile. Let's go to Tesla, right? So whenever you get a buy EMA, my exit strategy is the strat. So let me go to, let's say 1 hour. Okay. So let's say we got this buy EMA, right? So this buy EMA, turned into a 1 and a 2. So a 1, 2. So my exit strategy would have been right when it surpassed this area, which is 221. So if we got it around 218, I would have been out at 221. If we go to, let's say, the 15-minute chart on Tesla, and Tesla has been volatile, so I hope I'm not looking at something too crazy, but let's look at this Tesla, right? So we got a buy EMA here, right? As soon as we got to this high and we got a 2-2, this would have been my exit. So as soon as this 2 candle surpassed the previous candle, which is what made it turn into a 2 down. This is what a down is. So we had a 2-2 up candle that turned into a 2 down candle. So I would have been able to scrape 220 to 223 and said, all right, this is going the other way now, so I'm out. So I would have got out. As you can see, it kind of pushed back up, but it still dropped even more. So this indicator, a 2-2 down, would also be where I get into a puts play. Even though it doesn't say sell EMA, which doesn't matter, that's just what I would do, just because that it turned into a 2-2 candle. Then the same thing here. So if I got a sell EMA candle here, and this 2, another 2 candle and a 1 candle, and a short 2 candle that that smacked the 50 EMA, I would have still stayed into this put. Or another red candle, red candle, red candle, a 3 red candle, and then it turned into a 2 candle. So around this candle is where I would have been exiting my play for puts. So I hope that kind of makes sense. But I mean, that's what the EMA strategy. So as soon as you see a sell EMA, as you see here, right when the sell EMA came in, I would have been bearish this whole time, just because we're under the 8 EMA and we haven't had any clear reversal of the strat. So all of this is still no clear reversal. We keep smacking on the 8 and it keeps going back down. Now, if this breaks out of the 8 EMA, that's when I get out of the play. So around this area, which is obviously a gap fill for the next day, that pushed it back up, we would have been into calls, right? So as if we got to around another 2-2 candle down in the strat, so it would have been a 2-2 down. So right around this area, it surpassed the previous candle. So this previous candle ended around 217.96, and this kept going down, went under the VWAP, under the 34 EMA, and it hit right under the 8 EMA. The next candle opened under 8 EMA. So this is all a bearish move. So yeah, you also obviously want to look at the SMI, but the strat is what works wonders when you're getting into one of these golden indicator plays, because you always want to watch the strat when getting into a play. And just don't, like I said, don't hold it too long. When you hold it too long, it's just gonna make you go crazy and basically make you lose your mind and lose your money. And so that's something that you don't want to do. So don't overhold things. Always take your profits. Considering the strat, you can use it for swinging under the 4 hour candles, right? Yes. So the 4 hour candle is what we come up with our watch list for the following day. You know, for the top stocks, as in the S&P 500, like SPY, QQQ, the ES, the NQ for the futures, Tesla, Apple, Nvidia. You know, all of these big stocks. So we usually look at the 4 hour to know what's tomorrow's levels that we're going to look for. Is it, if it goes over these levels, then we're going to take calls. If it goes under these levels, then we're going to take puts. So yeah, 4 hours is very important when you're trying to look at the following day. So on Sundays, we always look at the 4 hour chart and come up with a watch list for the next day or the next, you know, for the following week. So these levels will take effect onto how you look at this at these stocks for the remainder of the week. So yes, it's very important to look at the 4 hour candles when you are um, looking to swing plays or you know, just kind of see where they might be headed this week. I'm sure how you choose Google 155 Cotton as a case study. So I'm not gonna go over that this week. You know, um, I'll make another live strictly for how to take a trade on Webull. So and the reason why is just because I had to go on my laptop and none of my stuff is connected on my laptop. So my Webull is not here, nothing's on here. So I gotta fix my webcam. I don't know what happened in the first live that I opened, and my camera just completely shut down. Um, as you can see here, there's like no light, and this thing is connected. So I don't know. I guess I gotta buy a new webcam. Uh, Sad because it was a really good one. The audio on that one was really good too. So like I didn't even have to use a boomstick or anything. But yeah, the next session I do, I will open my Webull account and I will kind of go through how to, you know, get completely like take that option play. You know, if I tell you guys 155 call, like I'll show you where I go, how to open it, and everything like that. What platform do you use to have to open it right now at Webull? Yeah, that's what I use. Webull. Recognizing you normally recommend closing half at price target, then close another 30%, a bit more than 20% at ultimate price target. What would you recommend for smaller accounts that cannot purchase multiple contracts? So, I've explained this before, but I'll go over it briefly again. So when you have a small account, like let's say like a $500 account, and a play that I call out is like $150, right? So you're basically, you know, if it's like midday, you had already had too many plays, then your buying power is probably going to be like one contract, right? So a person that buys one contract is going to be pissed when I say close half at like 15 to 20%, right? Because what's 15, 20% for you with one contract? That's not even 10, $15. And you're going to end up doing what? You're going to end up holding it, right? You're gonna be like, like why did he close it? Like it still looks so good. Like I'm gonna go ahead and hold it. Like I'm just gonna keep it. So then you end up keeping it, and all of a sudden this thing starts going the other way, and you see me say, oh, the rest of my position hit stop loss at break even, which is where I say the SLBE. When I say stop loss break even means that the rest of my position was just closed at our entry price or a little bit above it. So now you see me saying that, and you're like, you know what? I'm gonna buy more. I'm gonna buy one more. I have money to buy one more contract, and then it just keeps going lower. Now you're eating crap. So if you're buying one contract or you're buying 20 contracts, follow my movement. I don't care if you're making $10 because you only buy one contract, and I don't care if you bought 100 contracts and you made $1,000, and you're like, oh, I want to make more because this is probably gonna be my last play of the day. That's not my problem. It's all about you. It's your risk management. So I give you guys trade ideas. Um, you know, as you guys know, all of the analysts in every Discord that you know that you participate in, we are just giving you guys ideas, giving you guys a heads up on a couple of plays, that can potentially move. So look at these as trade ideas. And if you see us getting scared, not scared, but you see us saying, okay, we're gonna close half, or I'm gonna close 70% of my position, and I'm only gonna leave 30% of my position in. That means, let's say 10 contracts I bought, I sold seven, and all I got is three left. And then it moved up a little bit more. I sold the last two, and I'm holding one runner, right? So I'm holding one runner. I don't care if that thing goes back to break even, because it's a win. It's a winning play at the end of the day. So smaller portfolios, just follow us as if it's a big portfolio. That's the way you got to look at it. So you're going to be making less money, but you're going to be still consistent, and that's how you got to look at it. That 500 is going to turn into six, then eight, then 1,000. 2,000, 3,000. And if you keep being consistent and don't be greedy, and not try to make $1,000 in like one day with a $500 account, then you're going to make it. But if your mindset is just to sit there and bank, like right off the top, you want to make like $1,000 on each play, then this is not for you. That is considered gambling. And the stock market for gamblers is where most of these gamblers end up losing, and losing their bank accounts. Some of them just losing everything in their life. And so believe me when I tell you, don't overdo it. Don't hold things too long. Are you going to do more penny stocks, those ones that have been money? Yes. So this is a new thing for me. Not every Discord has the stock bot, the stock and the crypto bot. So if it doesn't have it, please let them know, to grab it. It's I'm not even charging that much for my bots anymore. So I'm just trying to get as big as possible, just by helping people. So yeah, follow those, especially the watch list that you see in the early morning. Those most of the time hit a good like 100 to 200%. And then these little promo plays are amazing as well. So these are very like assured plays for like at least a good 5 to 10 to like 20%. So if you go in like $1,000, $2,000 in these, you'll be making a good $200 to $300 like turnaround, and in and out. It's quick. It's not bad. It's pretty easy. What are the best stocks to buy options with a smaller account? I mean, it depends. Obviously, I mean, if you have a small account, that's something that you got to build. So, like I said earlier, just try to buy one contract at a time. When you see me cut half, just cut your full position. It's not a big deal. It's nothing to be ashamed of. I have many traders and that I've personally trained, that turned a $500 account into where they are now, which is close to 600,000, 700,000. And yes, it's very doable. I mean, I see these kids with my own eyes. I don't believe it myself. And when they sit there and show me, and like take a good one-on-one with me, and I'm like, you actually did it. Like I'm very proud of you, that to take that account within a couple of years to 600,000 from $500 is big dedication. So don't think that it's not possible. It really is possible. We've all been there. We've all blown accounts. Don't let that be something that's gonna turn you like turn you down. I don't want anybody to be turned down just because of a couple of blown accounts. We all blown them. I've blown 3 myself, and really big ones. Uh, so don't feel bad. I mean, we're all gonna blow an account once in a while. But as long as you learn from it, as long as you go back, you know, you go back and then you start looking at this play and be like, "Okay, why did we lose on this? Where did I see?" And then you're like, "Oh my God, it was at the 200 EMA on the 15 minute, and I was on the the 3 minute candle, and the 200 EMA, 200 EMA was so far away. I should have been looking at the 15 minute, like while I was in this, and I would have known that this would have bounced." So, that's something that a lot of people um, don't do, is go back on their losing plays. My number one thing is I don't go look at why we won. I always go look at why we lost. at the end of the day, I'm going back to uh, to like my few losses. Like if I have a couple of losses on the week, I go back and look at those and just like beat myself to like, okay, why did it not go my way? And sometimes it didn't go my way because of news. So I'm like, okay, so I messed up. So I thought S&P 500 should continue up, but there was like all this news coming out, and I wasn't paying attention to the news, and I wasn't looking at it, or I wasn't looking at the economics calendar. I wasn't seeing that, something was going on, something big was happening. Like I completely forgot about CPI, or I completely forgot about the PPI today. And that's something that can really hurt your play. So if you go back and look at it and the chart looks good, then go look at the news and see, okay, oh shit. So the, the news is what affected my play, not me. I did everything correctly. It was the news. So don't scratch that strategy off my list. That's still a great strategy. It should have hit, but obviously I missed something, during the play. So don't always look at a play as like, oh well, this strategy sucks because it didn't work out. No, if it's working, a good 70% plus of the time, then don't give up on that strategy. But my strategy has been at 85% now. So it's one of the highest right now. So it's up there. It's really up there with one of the best strategies out there. So it's doing good. And I'm proud of myself. Do you have a template for logging trades that you can share? I post my logs, and I don't do my logging. I have somebody I pay that does all of my logging. So I don't know. I mean, I can ask him to see it, what he does his logging with, but he does all my logging. I don't like to do the logging. I got way too much shit on my hand. Message retraced. Okay, can you share the ebook link again? Yeah, like I said, DM me, or I'll I don't know if I can share it. Can I share? Can I share a file like on my bot? I don't know. Just DM me. I mean, you guys know Mr. Top Hat. So if you guys want to know who the real Mr. Top Hat, so it's Mr. Top Hat. Okay, written like that and like that only. There's no other dots or underscores or whatever. Just search for that under Discord and DM me, and I'll be more than happy to send you guys a link. Do you have any tips for futures players in MQ? We are almost an hour in. My kids are gonna kill me, so I'll go over that. That needs a little bit more time for futures, so I'll set that for another time. That's not a problem. Would you ever do a video on how to get into futures and trade with small accounts? I will, and I'm gonna start making a lot more videos as I go, and I'll try to go over these videos throughout every live. Follow your risk management. I can't express that enough. I really can't express that enough. Follow your own risk management. That's the greatest thing I can tell you guys is everybody has their own risk management. Just follow it. Follow your risk. I've blown my account so many times. I think something that's truly missing is charting, learning indicators, learning how to read charts is something I've been missing. Yes, 100%. I love you guys too. Thank you. How to add gold indicator in trading view. Any NVIDIA? Well, I gotta look into NVIDIA. I mean, I can't really. Not sure. I gotta see where the levels are and where how good it looks first. I'm not sure. I can't really just tell you if I'm gonna trade it or not today. So come Monday, yeah, I'll let you guys know if I'm gonna trade it. To add the old golden indicator to trading view. So the golden indicator is a indicator that I use. It's a paid indicator, so it's not really an indicator that's available for free, but this is it. It's called the Top Hat Golden Indicator. Top Hat Golden Signal. If you want it, like I said, DM me. I left you guys my Discord username. Feel free to message me. It's Mr. Top Hat. Message me. I'll send you guys a link to the ebook, I'll send you guys a link to the indicator as well. I appreciate you guys for not talking about other discords in here, because I really want this to be something that I can do throughout all discords. I don't want anybody coming in here and fighting. Oh, I'm in this discord, I'm in that discord. Keep it nice in here, and we'll try to do this once a week as much as I can. Next week I am going to Hawaii, so I won't be here on Saturday, so I might end up doing this on Friday. Okay, so after the stock market closes, I'll be doing this again on Friday, and I hope to see you all in there, and just share it with your friends, please. The more people in here, the more I can answer, the more we can learn together. Okay. If I didn't answer anybody's question, if I missed anybody, I'm sorry. I'm just trying to ask it again on the next live session, and I'll be more than happy to answer all your questions. Love you guys. Thank you guys for coming. And I hope to see you guys again next week. All right. And we'll, like I said, we're gonna try to do this every Saturday at 5:30, except next week. I am going to Hawaii. So I'm sorry. I will try to do it on Friday. And let's go from there. Thank you guys for coming. I appreciate it. Love you guys. And you guys have a great weekend. See you guys on Monday.